In the last couple of days, there has been an intense drama around what we call the small savings instruments. Now, to put it in simple language, what happened? The Finance Ministry, as it does every year, on the 31st of March, issued a press release saying that these will be the rates of interest on small savings instruments. What are these small saving instruments? These are investments which people do in post office accounts, in Public Provident Fund, in various what is called patras, the Kisan Vikas Patra, the SMA National Savings Schemes, and so many of these. These are very popular ones, popular means of instrument for the middle class, because the middle class gets a higher rate of interest on these schemes than what they could get on comparable investments in banks. A lot of older people with a good income who basically have what is called fixed income assets like to invest in these because these give a steady stream of returns over the year. So overall, what happens on the rate of interest of these makes for a lot of interest in what we call the chattering class. What happened is that the Finance Ministry issued, as is supposed to do, a press release saying what will be the rates of interest for the new financial year. What happened thereafter is even more interesting. Early next morning, Finance Minister Nirmala Sitharaman issued a tweet saying that she had withdrawn that order. Soon as she had issued that order, or rather her office had issued that order, the rates were seen to have been cut down by almost 90 basis points, especially in the case of Public Provident Fund, which was quite unusual. In fact, if you look at the rate of 6.4, which the rates came down to, it's about a 46-year low for the rates of interest that we get on PPF. So it was a big cut. And there was immediately a lot of outrage, as it usually happens nowadays on social media. And more than social media, it started affecting some key places where the government was particularly involved. Small savings by themselves are nothing more than just what the government pays for, as we say, the clutch of these instruments for which the government raises money. Now, the government, and at one time, in fact, several decades ago, used to need this money a lot. But today, it is the public which needs this money a lot. What the government does is therefore provide the middle class a sort of a safety net. But it comes, like all the safety nets, with a price. The high interest rates are not what the economy needs. It is what the people need, but because of that, the rates of interest act as a sort of a floor, as economists would say, on interest rates which banks can offer to their customers. So banks have to also match these interest rates with fixed deposits that they offer, the rates that they offer, and that becomes a costly process. Why is it a costly process? Because this means that banks cannot give their clients any lending which is too far off from the rates of interest which they offer to their customers. Now, what happens is that when the banks give those rates of interest, they obviously, as we said, can't give lower interest rates for their people who take money from them. But everybody loves a higher interest rate if it is coming to you as a benefit. I don't want to pay higher interest rate. So neither do the public wants to pay a higher interest rate for loans that they'll take out. And neither does the government want to pay a higher interest rate for the loans that they take from the public through these small savings. But what happens then? Well, the answer is obviously cut the rates of interest. You can cut the rates of interest, but you cannot cut it when an election is about to take place. The same public investing their money in the small savings are also the voters. How much so? Just look at the statistics. In West Bengal, of the total small savings in the country, 15% comes from West Bengal state. Uttar Pradesh accounts for 11%. Karnataka accounts for 9%. Tamil Nadu, another election-bound state, accounts for almost 5%. So you can see that these are basically states which are, in a way, the middle class is prosperous, they have the money, and they would want the safety of it, saving their money in a place where there is no risk. Saving with the government, the small savings, carries no risk. They don't want the risk. They also want the rates of interest to be decently high. So the government is supposed to provide two things: provide a riskless form of investment and also provide what is called a high rate of interest. It is a difficult choice. In fact, what the finance minister faced now is not unusual, because this has happened to her former colleagues also. Finance Minister P. Chidambaram, I quite remember, had announced that he will link the returns on Public Provident Fund to taxes, because these were tax-free instruments. And immediately there was a blowback and he had to retreat several times. Similarly, even going earlier, Yashwant Sinha had tried to make what is called a rational form of the small savings instrument, linking them with government bond deals. He too faced a major blowback and had to retreat. So small savings, and because of the fact that this is the middle class, has a tremendous political impact to it. Therefore, it's not surprising that Finance Minister Nirmala Sitharaman, the first thing in the morning that she must have done is to have issued the tweet. Who would have told her, or whether she did it of her own volition, that's speculation, and that will never be confirmed. So we can't really, there's no point going in there. But the big takeaway is that it was important enough that she thought that she needed to make the correction. Now you might say, why did she need to make the correction? Why couldn't she have stopped issuing the orders? The point is, these small savings instrument rates have been set on what is called an automatic mode for the last few years, which is good. The rates get set quarterly. And as it happens in any government departments, the rates were set by the officers in the department on every quarter. So they'll be set in April, they'll be set in June, they'll be set in September. So they issued the order. So they set up the note. And since it is a routine procedure, it didn't even go to the finance minister. It just got issued and the order was there for the public. That there would be a storm, and then what happened is what we have seen in the media, and that is what has made it a bit of an interesting drama in the middle of the current election drama, which itself has got very surcharged. When the rates of interest gets cut on small savings, that means my income gets cut. But is that just a bad news? Actually, it isn't. Because we are trying in the last 1 year after the COVID impact is to make manufacturing grow in India. Now, if manufacturing has to grow, then industry people like you and me, startups coming from our families, young men and women trying to set up businesses would need cheap loans to be able to start their business. And how will they get the cheap loans? They will get the cheap loans from the banks, from the venture capitalists. And venture capitalists or banks will be able to give those loans cheaper if the overall rates of interest in the economy comes down. So while the older people might say, I want my higher rate of interest, the younger people actually would need the lower rates of interest, because that is what will ensure that they can get the money that they need at rates of interest, which is comfortable enough for them to start their business. So you can see that there is a major challenge here. And when the rates of interest come down, it's actually good for an economy like India, therefore, because we have got more younger people than older people. For instance, if the same drama was being played out in a European country, they would have clearly been on the favor of the older people, because you've got much more older citizens there who would want a fixed rate of interest, who would want a higher rate of interest. You would hope that in the next revision of the rates of interest, which will take place in June, probably this aberration would be corrected. Because if we are clearly saying that the rates of interest has to come down, inflation has to come down, then it clearly stands that the rates of interest has to come down. Remember, inflation actually gets triggered by higher rates of interest. So it doesn't mean that because we have higher inflation, therefore we offer higher rates of interest. It works the reverse way. So to correct the inflationary trends also in the economy, and for which the RBI will be taking a stock of it very soon in April with their announcement of the monetary policy, it is important that the rates of interest in the economy stays low. In their technical papers, which the RBI has been issuing, they've been saying this in several ways. And we should hope that better sense would prevail once the elections are over and rates of interest would start their southward journey again.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.